Welcome to the Opening Bell Report.
So today we are doing something a little different.
Yeah.
Usually, we're looking at these massive tectonic shifts in the economy, the trillion-dollar companies, the big geopolitical movers. But sometimes you got to zoom in.
You do.
You have to look at the cracks in the pavement where the green shoots are actually breaking through.
And sometimes those green shoots, they don't just break through, they explode upwards like a beanstalk in a fairy tale.
Exactly. That's a perfect way to put it. We are looking at a specific semiconductor stock that just woke up in a major way.
It really did.
We're talking about NVIDIA Semiconductor, ticker symbol NVTS. Now, if you track the semi-space, you know it's been a bit of a mixed bag lately. A lot of sideways trading, a lot of waiting.
A lot of waiting for the next catalyst from the big guys, yeah.
But then you look at NVPS yesterday, and it's like someone just lit a fuse.
It really was a statement day.
Yeah.
That's, I think, the only way to describe it.
A statement day. I like that. Okay, let's get the headline numbers out there immediately so everyone understands the scale of this.
Sure.
The stock didn't just tick up. It ripped up 9.10% in a single trading session. It closed at $10.91.
Which is just a massive move for a company of this size.
Right. And I want to pause there because I think a lot of retail investors see a 9% move and think, oh, it's just volatility. It's a meme stock thing.
Right.
But looking at the volume data you pulled, this wasn't a low volume drift, was it?
Not at all. And that is the critical distinction here. That's the difference between noise and signal. We see stocks drift up 5 or 8% on low volume all the time.
Sure.
That's usually just retail traders messing around or maybe a lack of sellers. But this was a high volume gap up.
Okay, so explain the significance of the gap up for someone who might just look at the closing price. What does that tell us about who is buying?
Well, a gap up on high volume is, it's usually the footprint of the elephant.
Mm-hmm.
It implies institutional interest.
The smart money?
The smart money. It means that mutual funds, hedge funds, they didn't just want to buy the stock. They were willing to pay a premium right at the open to get in. They were chasing.
Wow.
It suggests a sudden collective realization that, hey, maybe this stock was mispriced.
So the market woke up. And that is our mission for this deep dive. We need to figure out why the market suddenly woke up to this specific, relatively small player. Is this a one-day wonder?
Or is it a genuine breakout based on fundamentals?
Exactly. Is it hype or is it value realization?
That's the billion-dollar question.
We've got a lot to unpack. We're going to look at the narrative, this idea of sector rotation, which I know you have some thoughts on.
I do.
We're going to get into the secret sauce, the gallium nitride tech, and why it's so critical for AI. And of course, we need to look at the financials to see if they can actually survive long enough to win.
The survival question is key. Always.
But first, let's stick with the anatomy of this breakout. You mentioned the price closing at 10.91 cents. To me, that's just a number. But to a technical analyst, breaking $10 is a big deal. Why?
It's psychology. Pure and simple. Humans and the algorithms that humans program were obsessed with round numbers. There was a massive psychological barrier at $10.
It's the difference between being a penny stock and a real stock.
Exactly that. When a stock is in the single digits, $8, $9, it just feels speculative. It feels risky. Some institutional charters even forbid buying stocks under certain prices.
Right.
But once you smash through $10 and, crucially, you hold it, the entire perception changes.
And holding is what they did. They didn't just poke their head above 10 and then fall back down.
Nope. They closed near the highs of the day. And in technical terms, we say that the $10 resistance level has now likely converted into a support floor.
A line in the sand.
It's a line in the sand. The thinking now is, as long as the stock stays in double digits, the bulls are in control.
I saw a note here about exhausted bears. That paints a pretty vivid picture.
Well, it's a market mechanic, right?
Right.
Think about it. For months, every time the stock got near $10, people sold. They just wanted out.
Sure.
But yesterday, the stock blew right through that level. That tells you that everyone who wanted to sell at $10, they're gone. The sellers are exhausted. They've run out of ammo.
And now the buyers are stepping into a vacuum.
Precisely.
Okay, so the technicals are screaming, breakout! The chart looks great, but charts don't move themselves. There has to be a fundamental reason, and this brings us to the broader market. You mentioned sector rotation.
Yes. To understand NVTS, you have to kind of ignore NVTS for a second and look at NVIDIA, AMD, and the other giants.
The trillion-dollar club.
Right. Think about the last 18 months. If you were a fund manager and you wanted growth, you just bought NVIDIA. It was the easiest trade in the world.
And you made a killing doing it.
You did. But now, those valuations are sky high. I mean, they are priced for perfection. The easy money, the 300% gains, has arguably already been made in those massive names.
So the money starts to get restless.
It starts to rotate. It starts hunting.
Hunting for what exactly?
It's hunting for high beta, high growth small caps. It's looking for companies that are tied to the same massive trend AI, but haven't had their massive run yet.
And high beta just means they move faster than the market, right? More risk, more reward.
Yes, more volatility, but potentially much higher reward. And NVTS fits this profile perfectly. It's a way to play the AI boom without buying the same expensive stock everyone else already owns.
So if NVIDIA is the headline act playing the stadium, NVTS is like the indie band that the talent scouts just discovered in some club, and they realize this band is about to blow up.
That's a great analogy. But the band has to actually be good, right? You can't just be small. You have to have a real value proposition.
And this is where we get to the picks and shovels play. But it's not data shovels, it's energy shovels.
Exactly. NVTS is the picks and shovels, play for the energy side of the AI revolution.
Okay, let's unpack this, because I think most people get that chips process data. But why do we need a specialized company for the power? We've been powering chips with silicon for 50 years. Why does AI change that equation?
Because standard silicon is hitting a wall of physics. Where you're building these massive AI data centers to run things like ChatGPT, Gemini. These things aren't just big computers, they are energy monsters.
I was reading that a single AI query uses something like 10 times the power of a standard Google search. The consumption is just vertical.
It's astronomical. And here's the problem. When you try to pump that much power, that much voltage, through a standard silicon chip to convert it, you get two byproducts, inefficiency and heat.
And heat is the enemy.
Heat is the silent killer of all electronics. If you use silicon in these next-gen data centers, you're generating so much waste heat that you have to bet a fortune on cooling.
So you're paying for the electricity to run the AI, and then you're paying again for the electricity to cool down the equipment because the power chips are so inefficient.
Exactly. It's a vicious, expensive cycle. And silicon, it simply cannot handle the power density required for what's coming. It's tapped out.
Enter the hero of our story. We aren't talking about Silicon Valley anymore. We're talking about gallium nitride.
Gallium nitride, or GaN for short.
It sounds like something out of a Marvel movie, the GaN reactor.
It does, but it's very real physics. GaN is what we call a wide band gap semiconductor. So, without getting too deep into the quantum mechanics,
Please don't.
think of it this way. Silicon is an old two-lane country road. It works, but you can't drive a Ferrari down it at 200 miles an hour.
The Ferrari being the high voltage needed for AI.
Right. GaN is a 12-lane superhighway. Electrons can move through it much faster with much less resistance. And less resistance means less heat.
And less heat means you don't need the giant fans and the liquid cooling.
Exactly. You save money on electricity, you save money on cooling infrastructure, and this is crucial. You save space. You can make the power supply much, much smaller.
So if I'm Amazon or Microsoft building a new data center, switching to GaN isn't just a green initiative, it's a bottom line imperative.
It's strictly economic. If you don't switch, you are literally burning cash on waste heat. That's why NVTS is so well positioned. They are a leader in this GaN tech.
So AI is the main engine here, if that's the sexy narrative. But looking at the research, NVTS has a backup engine too. It's not just an AI play.
No, and that's what makes it a really robust investment thesis. The second engine is electric vehicles.
Which is the other massive secular trend of our time.
Precisely. And the problem in EVs is almost identical to the problem in data centers.
Yeah.
What do EV owners want?
They want to drive further, and they want to charge faster.
Range and charging speed. Both of those are power management issues. If you use GaN chips in the onboard charger of the car, you can make the charger lighter, which gives you more range, and handle higher voltages, which lets you charge much faster.
So you have the two biggest growth sectors in the world, AI and EVs, both screaming for the exact same solution. And NVTS is sitting there with the patents to solve it.
That is the very definition of a secular tailwind.
Yeah.
You aren't fighting the current is pushing you forward.
Okay, I'm sold on the tech. The story's great, but I have to put my skeptic hat on for a second. We are talking about a small cap company, roughly a $2.5 billion valuation.
Right.
Usually, when I look at companies this size in tech, I see a lot of risk. I see shaky financials. I see companies that are one bad quarter away from going under.
And that is a very healthy fear to have. In the small cap world, cash is oxygen. If you run out of oxygen, you die.
Or you dilute your shareholders to stay alive.
Into oblivion, yeah.
So how is NVTS's oxygen tank? Are they running on fumes?
This is what makes that 9% pop yesterday even more justified. It's not just hype. When you look at the balance sheet, for a company of this size, it's incredibly clean. We call it a fortress balance sheet.
Give me the numbers. Define fortress.
Okay, so cash on hand, approximately $150.5 million.
Okay. $150 million liquid. And the debt?
The debt is only about $6.9 million.
Whoa, wait, hold on. Let me get this straight. $150 million in cash and less than $7 million in debt.
Yeah.
That is basically zero leverage.
It's extremely rare for a high-growth semi-stock. Usually these companies are loaded up with debt to fund their R&D in their factories. NVTS is sitting on a mountain of cash relative to their liabilities.
But they are burning cash, right? They aren't profitable yet.
Correct. They're cash flow negative. They're burning cash to grow, which is completely standard for this stage of the life cycle. But the key is the runway.
Explain runway for anyone who might not know the term.
Runway is basically how many months can we keep the lights on and keep growing before we go broke? With $150 million in the bank, NVTS has a very long runway. They're not going to go bankrupt anytime soon.
And that means they don't have to do a desperate capital raise. They don't have to issue new stock next week and dilute me as an investor just to pay the bills.
Exactly. They have the freedom to execute.
Yeah.
They can focus on getting their chips into those data centers and EVs without looking over their shoulder at the bank account every morning.
And when you compare their valuation, $2.5 billion, to the size of the problem they are solving,
it looks tiny. If GaN becomes the standard, and physics suggests it has to, the total addressable market is in the tens of billions annually. If NVTS captures even a fraction of that, a $2.5 billion market cap will look like an absolute steal in retrospect.
it's the asymmetry of the bet. The downside is kind of capped because they have cash and no debt. The upside is, well, if they win, it's a multi-bagger.
That's the logic driving that institutional buying we saw.
Okay, so we have the breakout, the GaN tech, the Fortress balance sheet. Let's go back to the chart one more time. We talked about breaking $10.90. Where does this go next? What's the next battleground?
To see where we're going, you have to look at where we've been. This stock has been a roller coaster. It's ranged from $1.52 all the way up to $17.79. It's been volatile.
That is a very wide range.
It is. But breaking $10.90 was like breaking out of a cage. The immediate resistance, the next ceiling, is $11.15. That was the high of the breakout day.
Okay, $11.15. We are practically there already. What happens if we punch through that?
This is where the technical analysts get excited. If it clears $11.15, the chart shows very little air until $13.
Very little air. I love trader jargon. Translate that for me.
It means there's a volume gap. There aren't a lot of people who bought the stock between $11 and $13 in the past. And that means there aren't a lot of bag holders just waiting to sell to break even.
So there's no natural selling pressure in that zone.
Exactly. It's an open road. If momentum continues, the stock could glide from 11 to 13 very quickly because there's no one standing in the way to sell.
That is a compelling setup. Okay,
Yeah.
but here's the part that, kind of makes me laugh. We're sitting here analyzing this. The market is voting with a 9% gap up. What are the Wall Street analysts saying? The guys in the suits.
This is the funny part. The discrepancy is just wild. The consensus rating among analysts right now is holding, neutral, and their average price target is around $11.35.
$11.35. We are going to hit that before lunch at this rate.
Exactly. The analysts are effectively saying there's almost no upside left from here.
Why are they so disconnected? Are they just wrong?
I think it's structural. Analysts are almost always late to the party. They're reactive. They wait for the company to prove it. They wait for the earnings report. They wait for the stock to hit $15. Then they issue a buy rating and raise the target to 20.
So they play it safe to protect their reputation.
Correct. But the market moves faster than the analysts. The smart money that bought yesterday isn't waiting for a permission slip from an analyst at a bank. They are front-running the upgrade.
So for the individual investor, this discrepancy is actually an opportunity.
It is. You are seeing the price action confirm the thesis before the official experts on Wall Street have even updated their spreadsheets.
The market is voting with its wallet while the analysts are still trying to find their calculators.
That's a perfect way to put it.
So let's wrap this up. We've covered a lot of ground today. We saw a massive 9% breakout that smashed through that psychological $10 barrier.
A statement move on high volume for sure.
We've identified the why. It's sector rotation. Investors are leaving the crowded trade and the giants and hunting for the next high-growth winners.
The hunt for alpha.
We have a fundamental technology shift, silicon to gallium nitride, driven by the desperate need for efficiency in AI data centers and in EVs. The physics are on their side.
The picks and shovels of the future energy grid.
We have a financial safety net, $150 million in cash, barely any debt. They have the runway to execute.
Which mitigates that downside risk significantly.
And finally, we have a technical setup that suggests the bears are exhausted and there is an open road up to $13.
It's a setup that checks almost every box. Fundamental, technical, and narrative.
It really does. It feels like one of those situations where the market is trying to tell us something before it becomes obvious to everyone else.
The tea leaves are certainly aligning.
Before we sign off, I want to leave the listener with one final provocative thought. We spend so much time obsessing over the brains of AI.
Right.
Who has the best model? Who has the fastest chip?
Yeah.
But what if we're looking at the wrong constraint?
That's the thought that keeps me up at night. The constraint on AI right now isn't intelligence. We have plenty of intelligence. The constraint is power. It's electricity. It's heat. You can have the smartest brain in the world, but if you can't feed it energy without it melting down, it's useless.
So the real power in the market might not be the architects of the brain, but the plumbers of the energy.
While everyone fights over the trillion-dollar giants, the real unexploited opportunity might be in the boring, essential infrastructure that keeps the whole thing running. NVTS is trying to be that infrastructure.
That is a fascinating perspective. The brain needs the heart to pump the blood, and NVTS is building a much more efficient heart.
Exactly.
Well, there you have it. Keep your eyes on that $11.15 level. If NVTS breaks that, things could get very interesting very fast. Thanks for diving in with us today.
Always a pleasure.
Don't forget to like, share, and subscribe for more.